Hello everybody, this is Joe from PrepAgent. Hoping you have a good day. If you guys can all hear me, give me a thumbs up. I'm here, Malu. Just have to give me a second. I'm all ready to go. So how's everybody doing today? Okay, who here could tell me what is the secondary market? What is the secondary market? What is the secondary market? What do you guys think? Do you guys hear an echo from here? Is there an echo? Oh, good. Should have been doing here the whole time. Oh, Malu says yes. How picky. Okay, so the secondary market is the resale marketplace. Why do we have that resale marketplace? What do you guys think? Why do we have that resale marketplace? What's the point of it? What is the point of the resale marketplace? So Dale says it frees up money, frees up primary lenders, I should say. Good. I want you guys to remember resale marketplace. Everybody write that down. Everybody write down resale marketplace. Can we all write that down, please? It's a very important concept for all of you guys to understand. Resale marketplace. Good. Okay, let's do a question from the board. The primary activity of Fannie Mae is to A, buy and pool blocks of conventional mortgages and sell bonds that use them as security. B, buy and sell only VA and FHA mortgages. C, act in tandem with Ginnie Mae to provide special assistance in times of tight money. Or D, guarantee mortgages with the full faith and credit of the federal government. What do you guys think? And the answer is A. Buy and pool blocks of conventional mortgages and sell bonds that are used as security. Good. Let's go to the next question. Impound or reserve account most benefits whom? A, the trustor, B, the borrower, C, the lender, or D, the trustee? What do you guys think? An impound or reserve account most benefits whom? A, the trustor, B, the borrower, C, the lender, or D, the trustee? Glad to see you, Cindy. Cindy T. Okay, the answer is the lender. So what is that impound or reserve account? What's that all about? That's there for the lender to collect reoccurring costs. Okay, it collects reoccurring costs and take priority over the loan. What type of liens take priority over the loan? Who knows? What types of liens take priority over the loan? What do you guys think? What types of liens take priority over the loan? So things like taxes and insurance take priority over the loan. Mechanics lien would take priority, Shane, but it's not a reoccurring cost. Okay, so it's a way for lenders to collect costs that take priority of the loan. They don't always have them, but when they do, that's the point. Because if you don't pay your tax and insurance, you don't have money to pay off the loan. Are taxes a general lien or a specific lien? What do you guys think? Are taxes a general lien or a specific lien? What do you guys think? Taxes, it depends. If it's a property tax, a specific lien. If it's an income tax, it's a general lien. Good. Funds for conventional loans are received directly from whom? A, the Federal National Mortgage Association. B, private parties and non-governmental institutions. C, Government National Mortgage Association. Or D, Federal Housing Mortgage Association. What do you guys think? Funds for conventional loans are received directly from whom? A, Housing Mortgage Association. And the answer is B, private parties and non-governmental institutions. Okay. Move right along. The Equal Credit Opportunity Act makes it illegal for lenders to refuse credit to or otherwise discriminate against A, a single person who receives public assistance, B, a new home buyer who does not have favorable credit history, C, a parent of twins who receive public assistance and who cannot afford the monthly mortgage payments, or D, an unemployed person with no job prospects and no identifiable source of income. I'll read that again. The Equal Credit Opportunity Act makes it illegal for lenders to refuse credit to or otherwise discriminate against A, a single person who receives public assistance, B, a new home buyer who does not have a favorable credit history, C, a parent of twins who receive public assistance and who cannot afford the monthly mortgage payments, or D, an unemployed person with no job prospects and no identifiable source of income. And the answer is A, a single person who receives public assistance. Okay. A subordination clause in a mortgage or trust deed. A, allows a readjustment and alteration of terms as stated in the trust deed. B, prohibits the grantor from obtaining another loan before the original loan is paid in full. C, permits the obligation to be paid off prior to the end of the anticipated term. Or D, puts the loan in an inferior position in regards to other liens and encumbrances against the property. What do you guys think? Okay, the answer here is D, puts the loan in an inferior position in regards to other liens and encumbrances against the property. So subordination clause, if you guys don't know, it's a clause when you get a loan that basically says that this loan will not take priority over other loans. It will take a secondary position. Adrian, can you pull up a definition of subordination clause? I think there's one in the article we just did. We just did an article on this. So you can get the exact definition for yash. All right. Which of the following expenses is tax deductible for homeowners? A, pest control. B, interest paid on mortgages. C, utility payments. D, addition of a pool. I'll read that again. Which of the following expenses is tax deductible for homeowners? A, pest control. B, interest paid on mortgages. C, utility payments. Or D, addition of a pool. And the answer is B, interest paid on mortgages. Good. Have any of you guys tried the new vocabulary system? It's looking pretty good. If I don't say so myself. Thank you, Arthur. Put together a really good system. If you guys have any feedback on that system, just let us know and we will improve it however we can. It is live. It's live and ready to go. Okay, the interest rate on a real estate mortgage is A, regulated by Federal Reserve Board. B, determined by competition between the money and capital markets. C, fixed by the federal government, Or D, fixed by the State Real Estate Commission. I'll read it again. Interest rates on real estate mortgage is A, regulated by the Federal Reserve Board. B, determined by competition between the money and capital markets. C, fixed by the federal government. Or D, fixed by the State Real Estate Commission. And the answer is B, determined by competition between the money and capital markets. Do you guys have any plans this weekend? Are we going to open houses this weekend? I hope so. We should all be going to open houses this weekend. Who here is going to open houses this weekend? Everybody should be. Is any of you guys going to open houses this weekend? Okay, remember, we want to be ready to go after we pass. So after you pass, you guys are familiar with the inventory in the area, familiar with the local customs about selling real estate, how people operate in your community, all that kind of stuff, so you're ready to go. You should not be starting from scratch the moment you pass. Good luck, Althea. I hope you do well. Okay. When Jones purchased Brown's property on an installment sale, he used an existing loan, which exceeded Brown's basis in the property. The amount of the assumed loan over Brown's basis will be A, treated as part of the sales price, B, deducted from Brown's basis, C, treated as part of the down payment whether cash was received or not, or D, added to Brown's basis. What do you guys think? And the answer is C, treated as part of the down payment whether cash was received or not. Do we all know what broker we're going to work for? Do all you guys know what broker you're going to work for after you pass? You guys should all know what broker you're going to work for. If you're not, you should be researching that now. Do not wait till after you pass to do that. At the end of the day, you guys could look at all the different factors like commission splits, brand name of the company, if they're doing like training classes, all that stuff. But at the end of the day, the most important thing is, are you comfortable with the person you're going to have the most contact with? I see a lot of you guys are writing Keller Williams, but remember, Keller Williams is a franchise, which means each is independently operated. And so that means that a guy who runs one Keller Williams could be great, another one maybe not so much. And that applies to Coldwell Banker, Remax, all the ones that are out there. So really do not get caught up in the name on the front door or things like training classes or commission splits or mentor programs. Just find out who's going to be helping me get my feet wet, and do I like them? Do I vibe with them? What does my gut tell me about them? A, reducing the net sales price by the property's adjusted cost basis. B, subtracting the sales price from the original purchase price. C, subtracting selling expenses from the sales price. Or D, subtracting the selling expense from the original purchase price. Okay, I'll read it again. How is the capital gain calculated when an owner sells a principal residence? A, reduce the net sales price by the property's adjusted cost basis. B, subtracting the sales price from the original purchase price. C, subtracting selling expenses from the sales price. Or D, subtracting the selling expense from the original purchase price. And the answer is A. So the original cost basis is what it took you to actually first buy that property. The adjusted cost basis is things after you make additions and modifications to the property. Personal property is used in a business which is attached to the property. A, fixtures. B, trade fixtures. C, amenities. Or D, business amenity. What do you guys think? Personal property used in a business which is attached to the property. A, fixture. B, trade fixtures. C, amenity. D, business amenity. And the answer is trade fixture. A good one, Shane Sims. Happy Days reference is always a good thing. Chachi, Joni, Richie, the Cunninghams. An adjustable rate mortgage would be a good choice for all the following except A, a buyer plans to live in the property under 6 years. B, a buyer has a large down payment but needs a smaller monthly payment. C, a borrower's income will increase. Or D, anyone on fixed income. That's right, Ralph Mouth. Well, I'm sorry, Lisa. Do you hear the traffic? If you want, I can shut the window. It was just a hot day, so I had the window open. I didn't think you guys could hear it. But if it's really bothering you, I could go shut it. Sorry, guys. Sometimes I forget what you could hear. Oh, thanks, Lisa. A loan fee charged by a lender to increase the lender's yield on a loan is A, the principal, B, the interest, C, a discount point, or D, the yield. A loan fee charged by a lender to increase the lender's yield on a loan is A, the principal, B, the interest, C, discount point, or D, the yield. And the answer is C, a discount point. So as I've said before, very often the situation we're doing these webinars is not always perfect, but Adrian, Arthur, and I have always committed, no matter what, we're going to make sure we do the webinar for you guys. We never miss, whether there's echo problems, connection problems, traffic problems. But if you do hear noise or something you don't like, let us know. And the answer was discount point. Okay, first liens, which take priority over all other liens, are A, judgments, B, mortgages, C, tax liens, or D, construction liens. And I'll read that again. First liens, which take priority over all other liens, are A, judgments, B, mortgages, C, tax liens, or D, construction liens. Taxes. Nobody takes priority over the taxes. That is priority number one. That's right, Eddie. A balloon loan could also be described as A, a due on sale loan, B, a non-assumable loan, C, partially amortized loan, or D, fully amortized loan. A balloon loan could also be described as A, a due on sale loan, B, non-assumable loan, C, partially amortized loan, or D, fully amortized loan. C, partially amortized loan. Okay. Excuse me. A takeout loan in real estate financing is A, a loan that calls for payments to be made at intervals, B, a long-term loan to replace a construction loan, C, the amount of net proceeds actually available to the borrower after the deduction of the discount points and prepaid interest, or D, a short-term loan generally to finance construction. What do you guys think? And the answer is B. Remember this. Everybody write this down. Takeout loan, long-term loan. Interim loan, short-term loan. Everybody write that. Takeout loan, long-term loan, interim loan, short-term loan. We all writing that? Takeout loan, long-term loan, short-term loan, interim loan. A loan made with real estate as security and not involving the government participation in the form of insuring, guaranteeing, or direct lending is known as A, standby loan, B, conventional loan, C, budget mortgage, or D, Bancroft bond. And I'll read it again. A loan made with real estate as security and not involving government participation in the form of insuring, guaranteeing, or direct lending is known as A, standby loan, B, conventional loan, C, budget mortgage, or D, Bancroft bond. And the answer is B, a conventional loan. I've never even heard of a Bancroft bond, so what you guys got to remember, if you've never heard of it, do not circle it. Do not circle it. Right, guys? Trust in your studies. Never circle stuff you're not familiar with. Thank you, Shane. All the following are true of conventional loans except what? A, they are made to the buyer without governmental insurance or guarantee. B, the policy requirements of the lenders are not uniform. C, the requirements to qualify are uniformly fixed by state law. Or D, they require a higher down payment than non-governmental insurance or guarantee. B, the policy requirements of the lenders are not uniform. C, the requirements to qualify are uniformly fixed by state law. Or D, they require a higher down payment than non-conventional loans. And the answer is C, the requirements to qualify are uniformly fixed by state law. Okay, what I'd like to do today is finish up with a quick little bit of vocabulary before we get into the weekend. We did a bunch on finance. Let's do some quick vocabulary before the weekend comes. So write down for me, what is specific performance? Everybody write specific performance. What is that definition? Write the definition of specific performance using as few words as possible. What do you guys think? And specific performance is a lawsuit where money is not sufficient. You're suing somebody to perform an act because the money won't do. Therefore, specific performance, you do not sue the broker for that. You sue the seller or the buyer for that. Oh, I clicked the wrong button. Appreciation. What is appreciation? Appreciation would be the increase in value over time. Increased value. Quitclaim deed. What is a quitclaim deed? Who knows what a quitclaim deed is? Really quick, I want you guys to write these as quickly as you can. A quitclaim deed, what's that? What do you guys think? So a quitclaim deed would be immediate transfer of ownership, no expressed or implied warranties. Good. Bill of sale. What is a bill of sale? Who knows what a bill of sale is? A bill of sale. A bill of sale is something that is used to transfer interest of personal property. Transfers personal property. Good. Estated sufferance. Estated sufferance. What do you guys think? Estated sufferance. So estated sufferance. So that would be like a deadbeat tenant, somebody who's staying past their term. They're staying past their rights to stay. Good. Lease pendants. Lease pendants, what is that? So lease pendants is Latin for lawsuit pending. Pending litigation, it means it's not clear who owns the property. So basically the person selling property may not have the right to sell the property. It may not be theirs to sell. And that lease pendants is there to stop them from selling it, and they have to go to court to figure out if they're right or not. All right. Okay, guys, well, that's it for today. Have an amazing weekend. We'll be back on Monday at 10 o'clock Pacific time, 1 o'clock East Coast time. I will see everybody then. This is Joe from PrepAgent with Adrian. And have a great weekend, everybody.